Hello everyone. Today's market wrap-up is filled with intriguing insights, so let's dive right in. The S&P 500 and Dow Jones Industrial Average are on track to close August with modest gains. After a bit of a rocky start this month, the markets rebounded as investors embraced the soft landing narrative. This optimism is fueled by robust US growth and easing inflation, easing concerns about an economic slowdown. Across the pond, European markets are also on a high note. The Stoxx Europe 600 hit a new record driven by Eurozone inflation dropping to its lowest point since mid-2021. Meanwhile, in Asia, Japan's Nikkei 225 and Hong Kong's Hang Seng Index climbed, although Japan's higher than expected inflation is stirring talk of a potential interest rate hike by the Bank of Japan. Now, let's talk Treasury yields. The yield on the 10-year note ticked up, settling slightly above 3.9%. This rise reflects how investors are digesting the latest economic data and guessing what the Federal Reserve might do next with interest rates. Speaking of economic data, consumer spending in July was up by 0.5%, beating June's 0.3% rise. This suggests that consumer confidence remains strong, which is always good news for economic growth. And here's a key point: the Federal Reserve's favorite inflation measure, the Personal Consumption Expenditures or PCE index, held steady at 2.5% annually. This stability in inflation signals that the Fed's efforts to control prices are working. As a result, traders are dialing back their expectations for aggressive rate cuts in the near future. It looks like the Fed might take a more cautious approach if inflation stays in check and the economy keeps chugging along. That's it for today's market update. Stay tuned for more insights and happy investing. Please like and subscribe.